Today, we have a topic that often confuses investors: dollar cost averaging versus lump sum investing. Join me as we explore these two strategies and determine which one might be the best fit for you. To make things easier to understand, let's meet our two investors, Sarah and John. Sarah chooses the dollar cost averaging strategy, while John opts for lump sum investing. Sarah decides to invest $500 each month for a year, regardless of market conditions. This method allows her to buy more shares when prices are low and fewer shares when prices are high, effectively averaging out her cost per share over time. On the other hand, John decides to invest a lump sum of $6,000 at the beginning of the year. By doing this, he takes advantage of potential market gains and allows his money to start growing immediately. Now, let's discuss the advantages and disadvantages of each strategy. One of the benefits of dollar cost averaging is that it helps mitigate the risk of investing a large sum all at once. Sarah's consistent investments over time allow her to spread out the risk and potentially benefit from market downturns. However, it's important to note that dollar cost averaging may cause Sarah to miss out on potential gains if the market performs exceptionally well during the investment period. On the other hand, lump sum investing has its own advantages. John's decision to invest a lump sum allows him to take advantage of compounding interest and potential market growth right from the start. However, lump sum investing can be riskier, especially if the market experiences a downturn shortly after the investment is made. So, which strategy is the best fit for you? It ultimately depends on your financial goals, risk tolerance, and investment timeline. If you prefer a more conservative approach and want to reduce the impact of market volatility, dollar cost averaging might be the way to go. On the other hand, if you have a longer investment horizon and are comfortable with potential short-term market fluctuations, lump sum investing could be a viable option. If you found this video helpful, don't forget to like, share, and subscribe to our channel for more informative content. Thank you for watching, and we'll see you in the next video.